Imagine a single decision in a courtroom turning the crypto industry upside down. Billions in value hanging in the balance. Investors, founders, even rival regulators, everyone is holding their breath. Just as the dust seemed ready to settle in the epic fight between Ripple Labs and the U.S. Securities and Exchange Commission, a shocking new twist sent ripples of uncertainty through the entire market. If you thought the battle over XRP was ending, think again. What if the judge's move isn't just a legal hiccup, but a signal that the rules themselves are changing for crypto? This is the inside story of the Ripple-Sec war, the legal bombshell that no one saw coming, and why what happens next could define the future of blockchain, regulation, and digital money for years to come. Let's rewind to understand why this battle matters. In late 2020, just as crypto markets soared to new heights, the SEC filed a lawsuit that would become the most high-profile challenge in digital finance. They accused Ripple, a leading blockchain company, of conducting unregistered securities sales through the XRP token. The SEC's message was blunt. Many crypto projects could face the same fate. The case instantly divided opinion. On one side, the SEC, the world's most powerful financial regulator, determined to bring digital assets under its control. On the other, Ripple, a company with real-world banking partners and a global payments platform, claiming that XRP is not a security at all. For ordinary investors, it was chaos. Exchanges delisted or suspended XRP trading. Prices crashed, then soared on rumors and legal leaks. The internet buzzed with urgent questions. Was this the end of innovation or the start of a fascinating new chapter? By July 2023, it seemed like the story might reach a turning point. In a headline-grabbing ruling, Judge Analisa Torres declared that XRP itself is not inherently a security, especially when traded on secondary markets. For many, this was the legal green light they'd been waiting for. XRP's price surged. Investors danced in Telegram groups. Crypto advocates hailed a long-overdue regulatory breakthrough. But if you looked closer, you could see the real battle was just beginning. The SEC hadn't gotten everything it wanted, but it wasn't finished fighting. Ripple, too, found its win came with strings attached. An injunction restricted parts of its business, and a jaw-dropping $125 million penalty loomed over its operations. The sense of finality was an illusion. Behind the scenes, both sides quietly began negotiating. Could common ground be found? In early 2025, the crypto world watched as Ripple and the SEC drafted a new settlement. The headline terms? Ripple's penalty would be slashed from $125 million down to $50 million, with millions returned. More importantly, Ripple wanted the injunction, blocking some of its key business lines, finally lifted. For the exhausted XRP community, this looked like a long-awaited resolution. Then, in May, came a shock that no one expected. Judge Torres refused to approve the arrangement. But it wasn't about a missing signature or a simple technicality. In fact, the court's rejection was a powerful and chilling wake-up call. According to ex-SEC attorney Mark Fagel, there was a significant substantive problem with their approach, and the judge made it clear the bar they must clear is a lot higher than they'd claimed. The judge's message was unmistakable. Overturning a final court order is not just a paperwork exercise. In the U.S. legal system, modifying a final judgment demands a rigorous, convincing justification. Ripple and the SEC, despite their mutual agreement, hadn't managed to satisfy that high bar. This wasn't just an embarrassing misstep. It was a reminder that, in crypto law, nothing is simple, and every precedent matters. The direct result? The original penalties and business restrictions snapped back into place. Ripple faced the full $125 million fine. The injunction, a break on its most ambitious activities, remained firmly in force. And for all the chatter about settlement and closure, the lawsuit stayed alive, unresolved and threatening. For investors and industry watchers, anxiety spread. Social media lit up with urgent speculation. Why were the parties silent? What was really happening behind closed doors? Was this just a legal road bump or a sign of deeper problems, perhaps even strategic deadlock? Some feared that Ripple's leadership and the SEC were at odds over fundamental points of law and principle. Others wondered if the judge's move hinted at stricter standards for crypto settlements in general, a sign that the U.S. courts might not easily bend to regulatory compromise. Analyst Dark Defender, whose bullish XRP predictions are followed by thousands, summed up the mood. This case is bigger than Ripple. It's a test for the entire crypto industry. The uncertainty wasn't helped by the SEC's own behavior. Over the past year, America's top financial watchdog has been quietly withdrawing from some major enforcement actions against other crypto firms. Was this a tactical retreat, or the start of a new era where the SEC tries to redefine its approach to digital assets? Inside Ripple's own strategy, there are signs of transformation. Despite, or perhaps because of, the legal pressure, Ripple has pressed ahead with its global on-demand liquidity, ODL system, moving more than $15 billion in transactions by the end of 2024. Behind closed doors, Ripple's executives have made it clear. They're willing to negotiate on tough terms, even agreeing to enhanced public disclosure protocols and close regulatory scrutiny for at least 5 years. But uncertainty weighs heavily. Every day the case drags on, businesses, developers, and investors are left in limbo. Can Ripple truly expand, or will it remain shackled by legal ambiguity? Will other innovative crypto projects find themselves next in line for SEC attention? Insiders are divided. Some, like former SEC Commissioner Caroline Crenshaw, argue that settlements like the one Ripple proposed could undermine the court's order and create more questions than answers. Crenshaw's dissent echoes a growing sense within the SEC that crypto needs clear standards, not endless exceptions and backroom deals. But others see the deadlock as proof that the law itself is lagging behind technology. How do you categorize an asset that can be used in dozens of ways, some speculative, some purely functional? Is it even possible to regulate crypto under rules designed decades before the internet? All the while, the silence from both Ripple and the SEC since the judge's ruling has become deafening. No amendments, no new filings, no fresh statements to reassure the market. Investors scour court dockets and Twitter feeds for any hint of movement. Every rumor sends XRP's price swinging by millions. And perhaps the biggest question of all, what's the real endgame? Is Ripple positioning itself for a second, better-crafted settlement? Will the SEC dig in, hoping to set a tough precedent for other tokens? Or are both sides preparing for a multi-year court battle that could reshape the regulatory landscape for everyone? The only thing that's certain is that the stakes have never been higher. Judge Torres's refusal to approve the deal means that the next move, by Ripple, the SEC, or the courts, could set a precedent felt across Wall Street, Silicon Valley, and every country where crypto aims to go mainstream. As the world waits, an entire generation of investors, entrepreneurs, and regulators is forced to ask, can the law catch up with the speed of innovation? Or will the Ripple SEC saga become the cautionary tale that defines crypto's future? Coming up, we'll dig deeper. What strategies are left on the table? Who stands to win or lose the most from this legal standoff? And what signals can we find in the global shifts happening right now, as Ripple and the SEC regroup for their next moves? Don't miss what could be the most consequential turning point yet in the fight to define the future of money. With the curtain lifted on Judge Torres's unexpected rejection of the Ripple SEC settlement, the crypto world is left in suspense. But what happens next? Where does Ripple go from here? And what does this ruling truly mean for Ripple, for XRP holders, and for the entire digital asset industry? Let's unravel the most likely scenarios and the high-stakes consequences that this legal cliffhanger sets into motion. The immediate reality is sobering. The original $125 million penalty against Ripple still stands, and strict business restrictions remain. The agreement both sides hoped would close this chapter is dead, for now. As legal expert Mark Fagel put it, this was not just a technical mistake. There was a significant substantive problem with their approach, and the judge made it clear the bar they must clear is a lot higher than they'd claimed. So what happens now? There's powerful intrigue in the silence. No amended filings, no public statements, no roadmap laid out. This quiet has left the XRP community and really the entire crypto space speculating wildly on what's brewing behind closed doors. Some insiders suspect internal disagreements at Ripple about how much to concede in the next round. Others believe the SEC itself is reevaluating its broader enforcement tactics, especially since it has recently pulled back from over 10 other major crypto enforcement actions. There are even theories that political pressure or larger regulatory shifts could be influencing the strategy on both sides. But beneath the speculation, 4 clear scenarios are emerging as possible futures. First, we could see a revised settlement proposal. Ripple has signaled its willingness to negotiate. They've already proposed enhanced disclosure for institutional XRP sales over the next 5 years, an olive branch meant to address the SEC's core regulatory concerns. If Ripple and the SEC can craft a new agreement that satisfies the rigorous standards laid out by Judge Torres, they could still resolve this outside of a full trial. Such a settlement would likely include fresh penalties and perhaps tighter operational controls, but it would bring long-awaited clarity and probably stability to the markets. Second, there's the possibility of a prolonged legal battle. If neither side bends, the case could grind on for months, even years, with appeals, further injunctions, and escalating legal costs. This would keep Ripple and XRP under a regulatory cloud, limiting business expansion and keeping investors on edge. For the broader crypto world, it would prolong the uncertainty that's already plagued the industry since December 2020. Third, Ripple could double down on its global expansion strategy. While the US process drags on, Ripple's on-demand liquidity, ODL system continues to grow, processing over $15 billion in transactions last year alone. The company is striking new partnerships from Southeast Asia to Latin America, effectively bypassing US regulatory hurdles. If the American doors remain closed, Ripple could become a leader in global payments everywhere else, turning adversity at home into an opportunity abroad. The fourth and perhaps most unpredictable possibility is a broader regulatory shakeup. The SEC, facing pressure and division within its own ranks, as highlighted by Commissioner Caroline Crenshaw's public dissent, may eventually retreat from hardline positions, not just with Ripple, but with other crypto innovators as well. If Congress or the courts force clearer definitions between securities and commodities in crypto, the entire landscape could change in a flash. In that future, Ripple's battle wouldn't just shape its own destiny, but set legal precedent for every digital asset company in America. It's no wonder that crypto Twitter, industry analysts, and even traditional financial media are calling this the most important case for the future of digital finance. As one analyst from the recent research report said, Ripple won some early victories, but the real war is only just beginning. So, what are the real-world consequences for XRP holders and crypto investors? How should everyday people and businesses respond amid all this uncertainty? First, know that volatility will remain high. Every court filing, every leaked memo, every rumor is likely to trigger swings in XRP's price and ripple throughout the crypto ecosystem. If you're invested in XRP or other tokens under regulatory scrutiny, stay vigilant. Follow only trusted news sources. Don't make decisions based on social media hype or fear-mongering. As always, never invest more than you can afford to lose. Second, this saga highlights a crucial lesson. Regulatory clarity is king. The lack of clear rules has left both companies and investors exposed to sudden shocks. This experience shows why it's critical to understand the legal status of the assets you buy. Look for projects that proactively engage with regulators and are transparent about their compliance. Ripple's willingness to enhance disclosures and work within regulatory frameworks, even if under legal duress, stands as a blueprint for other crypto startups. It signals that cooperation, not confrontation, may be the better path, at least in jurisdictions with powerful regulators like the SEC. For entrepreneurs, this could be the moment to build bridges, not just better blockchains. Third, don't ignore the global perspective. While the US is embroiled in legal fights, other countries are moving quickly to attract blockchain businesses. The European Union has passed its markets in crypto assets regulation, MiCA, Japan's FSA has provided clear crypto guidance, and Singapore is developing robust licensing systems. For innovators and investors, watching global trends can open powerful new opportunities and offer backup plans if US policy remains unpredictable. For users and businesses, the underlying technology, the blockchain rails built by Ripple and others, continues to function and grow. Ripple's ODL network, despite legal headwinds, is settling billions in cross-border payments, showing the resilience and real-world utility of blockchain solutions. This is a reminder that while legal headlines can shake the markets, the progress of technology is often more steady than the news cycle suggests. And for the larger crypto industry, the Ripple case is a wake-up call. This battle isn't just about one company or one token. It's about whether innovative technology will be fostered or stifled by outdated laws and slow-moving bureaucracy. Industry associations, developers, and entrepreneurs now have a golden opportunity to push for smarter, more modern, and more consistent regulation, not just in the US, but worldwide. So where does this leave us? The suspense remains. Both sides are in a legal stalemate, with Judge Torres's ruling blocking an easy way out. The SEC's enforcement playbook seems to be shifting, but no one knows if that shift will favor clarity or just create more confusion. Ripple, bruised but unbowed, is betting on its technology and global reach to weather the storm. And for XRP holders, the future remains uncertain, but not hopeless. Analyst Dark Defender predicts that if current momentum is maintained and XRP breaks key resistance, we could see a run toward 585, a bold target that would electrify the market. But remember, such projections are highly speculative and depend on legal outcomes as much as market forces. In the end, the Ripple versus SEC case has become something much bigger than a legal spat over one crypto token. It's the flashpoint for the next phase of crypto regulation in America. Before this saga ends, it's likely to reshape not just Ripple, but the rules of the road for an entire industry. So here's the bottom line. Stay informed. Don't get swept away by the drama. If you're invested in XRP, diversification and risk management are more important than ever. If you're in crypto for the long haul, advocate for better laws and smarter oversight, because only clear, fair rules can unlock the industry's true potential. And now, as promised, a secret fact few outside industry insiders know. While everyone's watching the courtroom drama, Ripple has quietly been negotiating with central banks in Asia and Africa to pilot new digital currency payment corridors. If successful, these partnerships could make Ripple's technology even more critical to global finance, regardless of what happens in U.S. courts. Keep your eyes on the headlines, but don't lose sight of the quiet revolutions building in the background. What happens next? One thing is certain, this story is far from over, and every new development could send shockwaves across finance and tech. If you found this deep dive helpful, don't forget to like, subscribe, and ring the bell for all our latest analysis. Drop your thoughts in the comments. Do you think Ripple will ultimately win, settle, or be forced out of the US? And what's your